We need to turn the music on.
We are about to get started. Please find your seats. Mic test. Test, test.
Of course, no, it doesn't matter.
Yeah? I hopefully am not too tall.
No, of course not.
I think I just saw you at SG Innovate earlier. Was that right? You were at SG Innovate earlier?
Guess not.
Oh, then someone looked a bit like you was at SG Innovate.
Probably.
Hello, how are you? A few times. Many events. Melissa.
Okay.
Ajay.
And welcome to Be Curious About Data and Investing in Crypto.
Yes.
I am Serena from Samsonite, and tonight we will be hearing from 5 distinguished speakers who all have specific experiences in data and crypto. I'd now like to welcome and introduce active blockchain community supporters, block connectors, and BitTemple, who have made tonight possible. Please welcome founder of Block Connectors, Ongjun Hao and Scott from BitTemple to say a few words.
Hi guys, my name is Jin Hao, the founder of Block Connectors. We are a blockchain advisory company based in Singapore, and it's an honor to be hosting our event for the first time at BitTemple. BitTemple has given us a lot of support and also sentiment.
Thank you.
We have helped them organize event. I think this is the 3rd time in Singapore, and they are really good partners. And it's a pleasure to have all of you guys down here, late at night. And we even have the director of Ledger Nano at the back, Jasmine, who actually came to our event as well. So yeah, without further ado, pass on the time to Scott.
Okay, thank you, Jin Hao. So I'm Scott here from BitTemple. So I'm actually in charge of the community management here. and I also do events management at this space itself. So a little quick introduction about BitTemple. So we strive to be a global blockchain hub for blockchain projects internationally, as we have both centers and hubs in San Francisco, Shenzhen, Shanghai, Beijing, and finally Singapore. So we welcome everyone here, and we look forward to a great evening here with Sentiment and block connectors. So if you guys want to find out more about BitTemple, can feel free to approach me. And also I have a teammate here with me. His name is Solomon, but he's not here at the moment because he's helping out with the registration. But he's wearing this black t-shirt over here. Yeah, so feel free to approach Solomon or me. Yeah, we'll see you guys later. Yeah, and have a good evening. So now I'll pass the time back to Serena from Sentiment. Enjoy yourselves.
Ladies and gentlemen, if you're just walking in now, there are some seats around the front if you'd like to take a seat. To officially open the evening, please join me in welcoming Maxim Balashevich, founder of Sentiment. Maxim.
Good evening. It's very good actually to be in the beer market, beer market, because as I say, in a difficult time you really learn good partnerships and good people, and I'm happy that we stayed in long enough to run 4 long-term players in the crypto market. We tried to be long-term players, and Bitcoin is definitely one of them. We've been on this several times. It's a pleasure. And happy to learn now. BitTemple also was a great pleasure to stay there the last 3 days. Now. German language, sorry. Good, as I say, I'm a founder and CEO of Sentiment. What we are doing is a Sentiment 360-degree overview of the cryptocurrency market, like building the platform which gives you this overview. And we do it with the help of our appropriate data. We collect everything which we believe to be important for crypto space. We do a lot of metrics and dashboards. And now we're in the process even of pattern recognitions and signal identification and something important in the crypto space. We will cover a few topics of it. Now, why they're doing it? Because they believe the crypto here is going to stay, and there's specific reason for being in our society. And we want to be part of it, or we are a part of it, and we do everything which is in our power to support this development on a transparent and accessible for everyone level. Just a few facts: we have more than 1,000 tokens of coins covered in our platform. We have now even more than 37 metrics, and constantly adding more and more whenever we learn something new in the space, and everything accessible on our platform, and we build everything by ourselves. Full nodes, full pipelines, everything is done by our hands. For the reason of talk today, there are 2 major takeaways which I would like everyone to take from our talk. It's 2 things: that crypto, like every market, moves in the cycles. There is no time it's always growing in the bull market. There is no time it's forever in the bear market. It moves in cycles, and we need to understand and mitigate risks in the crypto markets. Maybe of the major task for us to see where the risks are. And in order to do it, we need some specific skills, some specific data, approach and frameworks. And as at the bottom written, the next market cycle might be already on the way, so we need to be ready what will happen next. Many of us know from experience what is a classic financial market. We try to apply it. But we do believe and we see that the crypto markets are kind of different. The cycles are much tighter, much more volatile, and in general, crypto moves much, much faster. Now, just a few charts. If we compare how Bitcoin moves the last, let's say, 7 years, how I put here, and compare it to S&P and all the indexes, we will see clearly that when Bitcoin moves through cycles, nothing really impressive happening compared to Bitcoin and the classic finances. And these cycles, they have specific meaning in the crypto space. Like in every cycle, there is some innovation, and then it's hyped, and then there is a cleaning process. Like whatever garbage has been created is removed from the market. We have two cycles. First, at the end of first cycle, we had, I don't remember how many different kinds of Bitcoin forks, copies, whatever. Most of them garbage were removed from now. At that time, Bitcoin was 95% of the whole crypto market. Now look at the second cycle, ICO suddenly was possible, easy to run on the Ethereum platform. So a lot of ICOs, lot of them also, unfortunately, garbage now it's removed from the market. And maybe we are now entering the third wave. Just to remember that every circle there is some innovation, something new is possible. It happens very fast, and we don't know away what is really happening now. But because there are easy ways to earn money, there are also a lot of layers only for money, so they're removed from the next. And of course, based on the data analysis, the crypto market is completely new discipline. Like it didn't exist even 2 years ago. People didn't apply any data or machine learning or anything for crypto analysis. It's very new sets of data. I believe new frameworks have to be applied, more based on behavior analysis and understanding how people act when they're directly connected to the values and value groups. So many things are new, so we need to get used to it. I took only 5 metrics visualization for the purpose of short presentation, and as I said, there are 40, 50 more to give you an overview on basically how crypto market can be analyzed with the data. So there is one quite famous in crypto space, the VRV ratio. So it was developed like last year, these two guys, Mark Martin and Rick, and they first applied for Bitcoin because they understood how Bitcoin as a blockchain works, and they created a specific method. And it's a kind of relation between market capitalization and acquisition cost for all tokens in circulation. And it's a quite good indicator for both stages when cryptocurrency network is overvalued and especially under. Now we took this technology or methodology, we changed it quite substantially so that it can be applied for any possible cryptocurrency network. Now we will show you like now it's from our metric from our platform for 2 coins for Bitcoin and for Ethereum. Now it's explain a little bit how does it play. So in Bitcoin, in Ethereum, you will see 2 basically here again cycles, strong cycles of movement in the green line. So the green line is the price, like volatile price in this case Bitcoin, and the yellow is this VRV ratio. Okay, it also moves, but it moves mostly up and down, up and down, up and down. And if what we know now, The moment it falls below 1, they consider the network to be undervalued because the total value for the network now is less than what we call paid or payable. Everything's similar. And we had it like 2 times in history. One time, long time ago, maybe most interesting this long accommodation period before it launched to 20,000. And maybe most were in this area again, 6 months ago. Yeah, or maybe also interesting thing that the upper limit gets lower and lower, maybe because of distribution of tokens, because people learn their history and they don't want to wait too long time to know it will go down, so they will start selling it. But it's quite clear, visible that high peaks, they're getting lower and lower, and maybe a ratio starting from 9 and 7. Last time it barely reached, even didn't get too high. Now, for Ethereum, the same, only difference that Ethereum had only 2 cycles. It's a new cryptocurrency, one high, one undervalued, another high, and here we're again. Now it's also in under 1. So based on history, we would say they are kind of under the same zone. Now, next interesting way how you can look into that. It's only for Ethereum. Green line as price for Ethereum. What is the red bars? Red bars is very interesting. ICOs, they're collecting Ethereum. They need to sell it in order to finance their work. This red bars represent how much Ethereum on a monthly basis in this case. ICOs who collected them move out of their wallets. Selling pressure in the market. And you see it was kind of eclipsed November 18, and since then it's going down. It looks like we see the most selling pressure from ISO products. There's not so much left to be sold.
Do you have a cumulative or sort of cumulative total Ethereum
Yeah, what I
or anything, any way of looking at the
Yeah,
cumulative?
yeah. Actually, this data is even publicly available on platform. No use for registration. Just go on the labs, and then you'll be at the scan, and you will see the download the data. Now, average stockage age consumed. This sounds a little bit mind-breaking. But what does it say? When you hold some tokens for 1 day, it will have value 1. If you hold the same tokens for 30 days, it will have value 30. So the longer you hold it, the longer it gets age, certain age, like this curve. And then when you move it out, this age is consumed. It's very interesting underlying behavior aspect. When tokens which haven't been moved for a long time suddenly start actively moved on the network, there is always some underlying reaction or emotion of the market participants. Here we've seen, after a long period of relatively quietness, they get, I would say, panicked. And it eclipsed again somewhere in late November. So the longest age consumed on the whole Ethereum market. Here they got more or less quiet when the Ethereum was rising, so they were not consumed so much. They were holding. And this is all different view how you look into the market using the data and applying the statement how humans typically behave.
So how do you capture the tokens that are in hardware?
Maybe keep your question after I finish. Well, I have time for 3 questions. Now there is a live example. I myself analyzed some things in the market months ago where different set of data applied not only on-chain, because what we discuss now is taken just on blockchain, but we should pay attention to now, it's a more complicated example, but try to understand it. It will give you deep insight into how crypto works. Whenever any coin or token started its climb or pump. There is some period when not so many people are talking about, the cycles accumulates, whatever happens, so many people, but there will always be a period of time when everyone is talking about it. You will read it on Reddit, on Telegram, on Twitter, everyone gets excited about it. Every single time, there are no exceptions. And you just need to know this fact not to buy the token. Because as I talked in the beginning, this is the biggest risk. You can buy the token and you can stay with your bags for a very long period of time. And if you want to start doing anything crypto, this is the first tool to learn things can be overvalued easily. People can overhype whatever they buy. You don't want to be the one to buy the token. Now, when we built recently as a tool, we are developing more and more, where we analyze or collect data from all social channels for crypto, and we see what is the most trending or discussed word or topics in crypto space. And when you see, like in this case, it was ethos or changing it was on all 3 occasions when it was snapshot what is the most discussed. On all 3 occasions, it was on the top 1 line, and it's not the biggest token. It's not the smallest one, but normal token. You see, okay, it seems to be a dangerous area. And if someone is saying around, oh, we need to buy it, you should be careful. And then we analyzed a little bit more. We checked what is the total supply, how much has been moved between different exchanges. And we find out that almost 10% of the total token supply has been moved at this point of time, as the price was applied to some specific exchange. Well, at that moment, mind of the crypto analyst says, I'm not going to buy it. It's too risky for me. Everyone is talking about it. A lot of supply moves to exchange, and that's exactly on the top, or like after a big price increase, not likely to be sustained. As you see here, also from the risk, there's no positive now. And it appeared to be right, it never recovers ever since. We dropped down and stay like 1%. It's a special part of our platform where we write sometimes insights to analyze. And basically, if you're registered, you can read it. Understand more how we can make different things today. Okay, we don't have time. Maybe after we're finished, you can scan the code. There will be a small example game. Can you identify the most hyped coins? Or you can save it on your telephone, open the app, and you can play it later. Everyone safe? Just scan the code. As I say, we pretty open platform. A lot of data, metrics, and education materials are available on our platform. We have a lot of everything for Bitcoin, Ethereum, transactions, internal transaction traces, everything, a lot of metrics on top of it. Just register, and a lot of social media and labeled exchange addresses. Many things which make your life as a research much easier. And you can join us on Discord. You can check our sandbanks. If you scan this code, you can ask for access to our extensive report. Don't get scared. There are a lot of metrics, but if you have questions, anytime ask us on Discord. We'll explain what you need support to use it. And it will be great if we get more knowledge and more usage of fast increasing level of data and metrics to get better understanding of the data. Thank you. Questions? So maybe 2 questions. Yes.
You were going to track the movement of the tokens, so the tokens that move into hardware, how do you analyze this?
It was not hard wallet, it's tokens which were held in. Are we talking about Ethereum ICOs?
One of the ones that is like analyzed how they move from one to one.
Okay. We labeled all addresses in the Ethereum network based on their behavior, relatively simple machine learning algorithms. What does it represent? And from this we have, okay, this is exchange wallets, deposit wallets. And I've also labeled not all, but most of ICO's treasury wallets. So whenever we notice movement from ICO treasury movement, we label specifically and you can see it on our chart. Or if they move to exchange or ended up on exchange, we'll also notice it on our notifications. How we do it.
So I'm curious about the chart that you actually had earlier on. Are you actually intending to do or already have done forecasting that is beyond the current month itself? And how do you actually measure that kind of accuracy?
We do have backtesting. I didn't represent it here. Part of our team doing professional backtesting, whatever we research. And if you go to our blog, you will see quite some researches we did on portfolio diversification or holding different categories of tokens or investing in projects that are mostly developed on every month basis. So yeah, we do check it. But as a platform, we don't give any trading advices. Our case normally we limit it. Here is the metrics and dashboards you should do score analysis. And here the tools we believe is very useful. We really show some examples. But yeah, try to avoid giving like trading advices. Because then it will become something different. We will very fast become hedge funds which we don't need. More questions can be answered after we finish this presentation.
Thank you very much, Nixon. I now have the honor of introducing our next guest speaker, Cheryl Wang. Cheryl is a FinTech Research Fellow at the School of Business from Singapore University of Social Sciences. Please make Cheryl feel welcome.
Good evening, everyone. I'm Cheryl Wang, and I'm currently doing research related to FinTech at Singapore University of Social Sciences as a research fellow. Today, I'm here to talk about investing in cryptocurrencies as a new asset class based on a paper that I have published. So we all know that for the past decade, the cryptocurrency market has been growing a lot. So I took this data from Sentinel website last Friday. We can see now there are over 1,000 cryptocurrencies and crypto tokens that have been launched and being traded. And the total market cap, although it has shrunk a lot for the past few months, still the total market cap is more than 100 billion US dollars. And we have more than 30 billion US dollars 24-hour trading volume. This table shows the top 10 cryptocurrencies. So if we take a closer look, we can see the market cap of Bitcoin now is almost 70 billion US dollars, which accounts for slightly more than 50% of the overall cryptocurrency market value. In fact, the Bitcoin dominance of the market cap has decreased a lot from over 80% in before 2017 to nearly 50% for the past few months. So this means the altcoins are playing a more and more important role in the overall cryptocurrency market. So we want to investigate whether the opportunities brought by the cryptocurrency market. We know there are many choices other than Bitcoin, but still there are many investors when think of investing in cryptocurrencies, they only think about Bitcoin, but that should not be the case. Even for the academic area, there have been many researches done on Bitcoin, but not many done on cryptocurrency market as a whole. So our paper tries to fill that gap by investigating the whole cryptocurrency market performance. In order to do that, we try to find comparisons between cryptocurrencies and the mainstream asset classes, such as stocks, bonds, commodities, and etc. So we first look at the risk and the return profile of the cryptocurrency, and as well as the mainstream asset classes. Then we try to see the relationships between cryptocurrencies and the mainstream asset classes. We also want to know what happens if we add cryptocurrencies into a portfolio that consists mainly of mainstream asset classes. To do that, we use CRIX as a proxy to show the overall market performance of the cryptocurrency market. We choose this index. It's basically like S&P 500 for the stock market. We choose this index because it was launched in 2014, which is quite early, and also the selection criteria of this index incorporates both liquidity rules and market cap. We also include a few cryptocurrencies in our analysis. We chose these 10 because they are most included in the CRIX index. We look at the risk and return profile, and we found that cryptocurrencies generally outperform the traditional asset classes in terms of the average daily returns. But this outperformance does come with a higher risk. This graph here shows the cumulative returns of the CRIX and other asset classes. We can see from the red line here, CRIX outperforms the rest asset classes, but it does seem more volatile than the rest. In terms of the relationship, we can see we try to examine the correlations between the return of the cryptocurrencies and the returns of the mainstream asset classes. We can see that the correlations are very low. For example, the correlation between CRIX and the S&P 500 is as low as 0.036, which means cryptocurrencies could be a very good tool to hedge the portfolio risks. We also examine the diversification role of the cryptocurrencies. You can see the red line here shows the returns of the portfolio that consists mainly of mainstream assets, and the green line here shows the portfolio that we add CRIX into that portfolio, the return. And it shifts the efficient frontier upward, meaning under the same level of risk, the portfolio with CRIX will generate a higher return than the portfolio without. So this transition map shows optimal allocation of the asset classes within the portfolio on the different level of portfolio risk. We can say two things about this graph. One, it is dominated by the green and blue area, which means S&P 500 and CRIX dominate the portfolio. And second, if an investor is willing to take more risk, for example, the threshold is 2% here. If he's willing to take more than 2% risk, he or she should invest more than 50% of the initial wealth into cryptos. Next, we want to see what are the drivers of the cryptocurrency pricing. As we know, the lack of underlying assets for cryptocurrencies making the evaluation of its fundamental value very difficult. So the common pricing model for cryptocurrency market is not applicable. So our hypothesis is that we think investor sentiment may be one of the driver of the cryptocurrency pricing. We use the proxy past return here to represent the investor sentiment. And if our hypothesis is correct, then we'll have this one. So high past return of a particular cryptocurrency will show that investors are optimistic about that particular cryptocurrency. And then we have high investor sentiment for that cryptocurrency, and we also will have low return for that cryptocurrency in the future. How does it work? So basically the implications are that we have retail investors who will pay attention to the extreme returns of the cryptocurrencies, and they will buy the one with extreme high past returns and sell the one with extreme low past returns. Then this will cause the price to deviate from its rational allocation. We refer to it as mispricing. And then rational investors will react on this information and they will enter the market to correct the mispricing. So we will observe a reversal effect. And if you have any questions, you can just stop me. Then, before we see the results, we use top 100 cryptocurrencies that have been included in the CRIX index. Previously, we just see the top 10, but currently we extend it to top 100. Then we sort and categorize these top 100 cryptocurrencies based on the past returns, which is also the sentiment. Then we have these three sentiment groups: high, medium, and low. And from the graph, we can see there is a clear reversal effect here. So the returns of the high sentiment group is high and then reversed. Similar for the low sentiment group. This graph also shows that how fast does the rational investor react on the information. The answer is 1 day. This is 0, this is 4, so 1 day they react on the information. Now we know that there is sentiment effect in the cryptocurrency market. What can we do about this piece of information? The answer is we will act like the rational investors, and we form portfolio strategy to use that information and to gain profits. How do we form the portfolio? So these are the steps. Firstly, we will use the 100 cryptocurrencies and calculate their sentiment, which is the past returns. And we have 100 cryptocurrencies from high sentiment to low sentiment. Then secondly, we will choose the one with high sentiment. We use top 10 cryptocurrencies with high sentiment. Because from previous graph, we know that currently the one with high sentiment, they have high past returns. But in the future, the returns will drop. So we will short the top 10 with high sentiment. Similarly, we will long the ones with low sentiment, because currently the returns of the low sentiment group are high, but we know that the returns will reverse. So we will long them. And then we hold each portfolio for 1 trading day and rebalance it. And every day we do the same thing. So there are 10 cryptocurrencies in this portfolio, 10 in this, but the 10 may be changing. Okay? So here's are the results. We can see the cumulative returns of the sentiment portfolio here outperform the rest because we also use two benchmarks. The CRIS index shows the overall market performance of the cryptocurrencies, and we also form an equal weighted portfolio, investing equally into the 100 cryptos. In terms of the risk-adjusted returns, we can see from the Sharpe ratio and information ratio here, the sentiment portfolio also outperforms the rest, actually by a huge margin because we have the highest value here. Okay, so we now know the sentiment portfolio does generate a good performance. Here comes the conclusion. So cryptocurrency is a good tool to hedge the risk because of its low correlations with the mainstream asset classes, and it also has a good diversification role, and because inclusion of cryptocurrencies can increase the performance of the portfolio that consists of mainly mainstream assets. And we also know that there is a sentiment effect in the cryptocurrency market, and we can generate high risk-adjusted returns based on the sentiment portfolio strategy. But we should note that there are several obstacles to implement that strategy in real life. For example, we have 100 cryptocurrencies, and we need to sort them and hold them for one trading day and rebalance the next day. The process can be very troublesome in real life. Also, just like investing in any other asset classes, we should always keep two things in mind. One, we need to be well diversified. Never put all your eggs in one basket. And two, never invest more than you can bear to lose. That's all I have to say. Thank you.
Thank you very much, Sarah. Ro Pet is the portfolio manager at Queen.
Can we ask Cheryl a question?
Michelle.
You don't get off that easy.
I was wondering.
Liquidity.
Liquidity?
Yeah.
What do you mean by liquidity?
Well, liquidity in the S&P and liquidity in any of your indices is probably 1 billion to 1. So how do you deal with that equation? So I accept the science. That's great in a lab. In real markets where you have to deploy capital, how do you suggest Fidelity that they should use CRIS sentiment index to hedge their $300 billion S&P portfolio?
Yeah, actually, I know that the performance of CRIS index alone also is very promising, but my suggestion is that you should never invest in only one asset, in only one cryptocurrency, even if it is an index that reflects the whole market performance. Yeah, because the CRIS index alone, although currently I think it involves 55 cryptocurrencies at a time, but the movement of the CRIS index still can be quite volatile. Yeah, so I'd say.
So while it's just liquidity adjusted,
Yeah.
in theory it sounds great, but in reality. But I think you've done excellent work, so thank you.
Thank you.
Thank you for the question, and sorry for the quick disruption over here. So if the audience would like to raise a question, right, maybe you guys can let me know, and I'll happy to pass the mic so that you guys, so we can have more lively interaction between the speaker and the audience here. So just let me know, raise up your hand, and I'll pass the mic to you guys. Yeah, thank you for understanding.
Are you trading a strategy? Are you trading a strategy?
No.
One other question. What was your end date? I know you started in 2014.
Yeah.
One of the graphs showed that only in
2017. Yeah.
So you didn't capture all the fall in 2018.
Actually, we have done just for our research purpose, not to publish anywhere. We have done a post 2018 study for the strategy and for the correlation analysis as well, and the results are similar. So there are still good performance.
Yeah, I was wondering. Thank you.
Yeah.
So it's quite surprising the correlation analysis. I mean, very clear. I mean, I know you're showing it, but there is very weak correlation. But you know, when you kind of look at the way the markets are behaving, when mainstream assets go down, crypto also goes down. And I say versa, so I don't know why it is somehow wrong.
But sometimes, we can refer to the methodology. Sometimes what it appears to be doesn't necessarily be the case. So I still think the results can say something. Maybe it is not so correlated as we think it would be. Yeah, that's the question. Yeah, that's the question, because currently we cannot shop. But even though we just do the long path, still can generate some profit. Yeah.
Okay, ladies and gentlemen, thank you very much for the lively interaction. So maybe we can have a Q&A during the networking session, because we still have other speakers from various industries to share for this evening. So I seek your kind understanding. Yeah, thank you so much. Serena, please.
I'd like to introduce real fast because the portfolio manager at the investment department. Please join me in welcoming
I want to start off by answering your question. Because I heard it at the slide. Yeah, you're right that the market is going down with cryptocurrency. The traditional asset classes, especially equity, is going down in the short term. But I think not say better. Another way to look at it is because in the short term they are both risk-on assets. So right now they have that correlation that when people want to take on risk, we can look at crypto, equities, technological stocks. When people want to be risk-off, they just exit both of them altogether. So in the short run, they might seem correlated, but I think the fundamental value driving these two asset classes are very different. For equities, earning, growth. For crypto, another thing altogether. So in the long run, we might start to see the diversion between the correlations. Right now, risk-on asset, you're right. They do behave quite similarly. Hi, my name is Royal. I'm a portfolio manager at Queen Investment Partners. So today I just want to share with you some method to look at investing and trading crypto in 2019. So Queen Investment Partners, we are a subsidiary of Queen Invest Consulting Group. So we were used to be trading private equity in the past, but right now our mandate is fully into blockchain and cryptocurrency. That is the team behind Queen Investment Partners. Myself, I'm the one in charge of managing the whole portfolio, really more for the quantitative and algo approach. Came from GIC real estate team. Terence is my associate portfolio manager. We have Sophie. Terence is more into digital tech or corporate development. Sophie is in private equity because of our life in alternative assets. We have our investment manager, which is Swiss Asia Financial Services. And of course, we have our own tech expert, which means everything coded is owned in-house by Queen. So the first speaker spoke about market cycles and how do you actually see that and understand that. I think that could be reflected quite clearly here in numbers rather than charts. So we see that in 2011, there was a correction from $25 to $2, 94% correction. And every 2 years, we seem to see that happening from $260 to now $45, 83% correction. And then 13 to 15, we see that again, 87% correction. And as you all know, last year, about 81%. So that price point is in November. If you take a reference to today, you realize it really haven't moved at all. Right? So about 3.8 today. It did go down to 3.3, 3.2, went back up to 4. People sort of get excited again, and then boom, you take the hit again. So what I'm trying to say here that this is very usual. People see this in Bitcoin, cryptocurrency happen much faster and more frequent than the traditional asset classes, but this happened before. And today we should be thinking that, hey, are we at the bottom yet? We still didn't go down much bigger before. So are we at the bottom? No one really knows. So if someone were to tell you that the bull market is coming, we're going to see it rally right now, that is probably not true, and I'll explain a bit more why later. Okay, so today I just want to introduce two methods. I came from a traditional background, so I tend to look at this asset class in more like a modeling way. Is there anything we can do to capture the value and see is there really any intrinsic value in this asset class? So like I mentioned, equities, we look at earnings, we look at growth. For bonds, we look at yield, we look at interest rate, real estate, we look at rental, we look at weighted average lease expiries and mechanisms like that. So what do we look at when we look at cryptocurrency as a new asset class? Two ways, we can look at it from two points of view. Short-term wise, we have people valuing Bitcoin as a social network, meaning the value goes up exponentially with the number of users on the network, and then we can capture N using the daily active addresses, and you see, although we have the argument that one could be holding two addresses, but when the numbers play on the long run, that shouldn't be the case. Then we can then estimate the value of the network using Max's law, and then try to come out with an intrinsic, like a fair value for Bitcoin. Long-term wise, which is what most people are actually more reliant on, is to value it as a digital store of value. So right now, the store of value, people look at gold, people look at safety haven assets, the yen, the dollar. So you can actually capture part of that market cap and then assign it to Bitcoin overall market capitalization. It gives you a fair value. By no means that they are very accurate, but at least you have some form of benchmark to look at, is this undervalued or overvalued? I think there were some metrics that shared earlier on, but this is definitely something that I'm looking at. So based on the sentiment data, I use the on-chain metric to track, like I mentioned, daily transaction volume, daily active addresses they are actually using. So the start in 2017, the orange line is the price action, and then we see this green line, which is the daily active addresses used, the number of people that is actually using the network. We want to use on-chain metric because we try to minimize speculative trading volume. So we don't want that, so we use the on-chain metric. Although people argue that I'm transferring Bitcoin because I want to trade and stuff like that, it could be still recorded, but we still think that it is clearer to use that rather than using trading volume as well, which has a heavy speculative nature to it. So if you look at that, you can see that how it correlates with the price action. Logically speaking, if you have more users using the valuation method of Bitcoin as a social network, it should be more valuable. So that again gives you some form of benchmark for you to bench yourself to see that is it undervalued or overvalued. But again, you can use a couple of different models, and I actually have my models here printed out, so we could talk more about it if you want more in depth. You can find me after this presentation. Okay, so price to earnings is what also they use for traditional asset classes. But in here I explain how the new transactional value is earning, and that is really again looking at it from like a social network point of view. But you can see after you've done the work, you can see that value, the Bitcoin network value, actually really correlates to the transactional value. So again, the model I have in that here, you can find me after my presentation. So that is FA. But I think what's more important today in trading cryptocurrency in 2019 is actually looking at price action. So three things that my fund looks at. We look at price action, we look at volume, we look at open interest. Because all these things gives me an indication of how strong or how intense a trend is. You can have different methods, right? But at the end of the day, you should identify what kind of trader are you. You can't be both. You can't be all of them. Because if you are, probably means that you don't really know what you're doing. You try to catch range-bound market, you try to catch a trend, but they are contradicting to each other. How can you have an algo that catch trend but profit in a range-bound market? It's almost impossible to do that. Again, you need to identify what kind of traders are you. Obviously, there are market neutral strategy, there are market making when you sort of don't take a lot of risk in terms of trading the market, but you need to identify what kind of trading strategy that you want to use to trade this market. My fund uses the trend following method. Again, I'm happy to discuss more at the end of the presentation. So At the end of the day, it's all about risk management discipline. I think the previous speaker shared about never invest more than what you can lose. But the word invest is very different from trading. So if I think there is a trader who once told me that investing, how do you actually differentiate whether you are an investor or you are a trader? A trader takes on a short position as willingly as like a long position. Whereas an investor, they don't really take short position because you are believing in this fair value of this asset. You buy when it's undervalued, or you can buy it as a growth kind of asset. That is the main difference. You need to identify yourself what you want to be and how do you want to trade this market. And never forget that it's actually all about expected return, win rate, and overall profitability. You need to care about your risk reward every single time you take a trade. My recommendation is always to have a trade log, so you know exactly why do you enter the trade, where is your stop loss, where is your take profit, and for example, if you're in a trend following algo, when do you then cut your losses and everything. Everything in this highly skeptical to subjective to manipulation market, it's very important to have a stop loss in place every single time you place a trade. And I just want to highlight that it's a zero-sum game. Meaning, if you're buying, someone is selling to you on the other side, they have their reason to sell it to you. I think a lot of people fail to understand that, which makes trading such a difficult game to beat. Where everybody has their own reasoning looking at the market. You could, I'll give one example of the using trade war, US and China trade war. It's an extension of the deadline of positive news or negative news. People see it as positive, you can see it as negative as well. How do you see that? It's difficult to reach a deal. That's why the deadline is being extended. There's always multiple ways to look at a piece of news, and that is why trading is so difficult. But overall, if you care about the numbers, you have your stop loss, you have your take profit, the nice risk reward, then overall you can be profitable in this market. We talk about diversification. I think that is difficult in this market because they all act in tandem, they all move in tandem together, so they have a very high correlation score. Longing Bitcoin and shorting Ripple is one of the very popular long-short strategy last year. Probably would have died. And so it all depends on a fundamental view on the market and then how you decide to trade. That is why I'm always advocating for fundamental analysis, technical analysis, identifying your investment style, why are you trading, and then sticking with it, having this system and then having the discipline to take it. So to just end off, I will share the portfolio allocation of my fund. As you can see, it's heavily weighted against towards price action, meaning I focus a lot on PA. That is why we could use a lot of data from Sandberg because that's really helpful at times. Like I mentioned at the very core, a trend following strategy. So trend following, it means you're not predictive, you are reactive. What do I mean is you don't predict where the market is going to go. You wait for a confirmation before entering a long or a short. It is reactive, it's not predictive. When people ask me, hey, where do you think the market is going to go next? I don't need to know, I don't care. My algo is reactive. And the element between different trend following algo will depend how reactive. Because the more reactive you are, the more tendency that you have the more tendency to trade. Right? Reactive. Any bullish signal you might take it, might be a false breakout, you lost that trade. So it's about finding that sweet spot and determining how often should you trade, how often is there really a trend, like what they call last time, a pure momentum strategy. 10% is still a believer in the space, you still like certain projects, so that is an allocated amount to them. And 20% tactical, forming a fundamental view, and then doing a long short strategy. You could buy into the index as well, if there's enough liquidity. Basically giving us the flexibility. Again, why, if you are so confident in the board, why not 100%? Trading is all about risk management. Trading is all about what numbers you can, as they call it in Singapore, tahan, right? Before you start to panic. So if it's a 100% allocation, that's going to be scary. The numbers are going to be a lot bigger. And the other strategies are actually profitable as well, if you have done enough research and you believe in your own model. Some criteria for us, we look at market cap, we look at exchanges, we need, as a trend follower, we need the ability to go long and short. That is why we are only trading on the top 3 coins. The numbers there are not updated, but just gives you a rough view of how our system goes through the top 20 coins each day to identify which coin falls into the investment sort of criteria. So I will just flash the number. Next page is my return from last year. So I'll do it in 5 seconds. But if you can catch me after the presentation to know about it more. This double digit. That's it. You can find me afterwards to know more. The year of 2019, some of the bigger things that are actually appearing. People are looking forward to Meetup, people are looking for the new upgrades, scaling solution, gaming, decentralization app, emergence of more stable coins. Definitely a lot of exciting things is happening. And if you trust the numbers, if you like the time horizon, if you look at market cycles, then you know, based on past action, we are close to the bottom. But no one can catch, no one can time it perfectly. The top, the bottom, no one can do that. So how do we actually then profit from this market? We do a long ball strategy, long volatility strategy. For those who have been trading options the last time, you know it's a straddle strategy. That's when if you lose money in the market, the underlying asset don't move. You profit when it's an upward movement or a downward movement. So I always tell my investor this one thing. If you buy into the fund, you buy into the strategy, you are actually longing vol, you are longing volatility, and if Bitcoin goes to 1K, you earn. If Bitcoin goes to 10K, you earn. But in 1 year time, do you think Bitcoin will stay at $3,500 in 1 year time? We could all come back here next year, it won't be at $3,500. That's how we are aiming to profit from the market. Thank you. Question at the end.
Thanks very much. Rowan mentioned that he'll be sticking around to the end, so please do save your questions so we can. Just before I introduce the next speaker, can I please get a show of hands? Does anyone here think crypto is dead? Okay, hands up if you think crypto is going to stay. Okay, and keep your hands up if you are still actively trading. Okay, great. Please join me in welcoming Ryan Lai, the founder of Crypto Grinders. Ryan.
Hey guys. Okay guys, so I am really new to the space, but you know what? Being so new, right, I always see the same faces. So whenever I stand on stage, I'm never ever like worried because it's like family already. So as much as you guys are here, may I understand roughly, maybe I can know the crowd a little bit more. Who are investors at the moment? So I can gear my talk towards, don't worry man, raising your hand is fine. So investors, very few. Institutional traders, wow, okay. VCs, no. Okay, curious crypto enthusiasts. Right, so what are the rest by the way? Okay, I assume projects, okay, cool. So guys, I started the company. Let me move a little bit for a little bit of a shield. I started the company back in 2017, October, right? And the reason why I did that, because there was lacking of information and education. This is the part where, as an investor myself, I was trying to further figure out what the heck this space was. Firstly, I'm not a developer. So developers, by the way, if you can help us understand and we can be your voice, let me know, give me a call, yeah? So a lot of this space right now is all about the tech. Who's here for the tech? Right, who's here for the money, man? Wow, where the rest are everyone's coming in from? Okay, fine. Alright, so never mind, that being said, so today's talk will be literally about trust and transparency, because when this space starts to mature, right, and it's not anywhere near the maturity level, being 129 billion in terms of market cap at the moment, it's a peanut in terms to the capital markets. So as an ex-banker, right, for literally 6.5 years, from 2008, right, yeah, I did come in at the Lehman Brothers and subprime, by the way. So, but I had a job all the way for 6.5 years. And the whole idea about building trust and transparency is so important, especially when you represent a bank and when you're handling a fuckload of money. I think the most important, I wonder whether I can say that, I'm so sorry if I will cut that out. Okay, so when you handle a lot of money for your clients, I think the very least that you can do is tell them the risks involved. A lot of this space, right, is lacking in that element, and that's the sad thing. A lot of people don't even understand their own risk, right, let alone the risk of the company. So if the ICO space is truly going to clean itself up, it has to start building that trust with its community. At the same time, it has to build a full framework that offers a certain level of transparency, right? May it be from the smart contract, may it be from your white paper. I would really appreciate that, because that would help me out, right? When we're interviewing you guys, I think we run the channel for, we just had Tone Vase, we've had Charles Hoskinson, we've had Pantera Capital's Miko Matsumura, and everyone sings the same tune, because everyone here plays a part, right? It's not about me, it's not about the investors, it's not about the projects. Everybody needs to come together. And the unique thing, and I find the most interesting, anybody in the Apple Discord group, Apple Shares Discord group, Facebook Discord group, anyone? Yeah, it doesn't exist. Because you can't talk to Mark Zuckerberg and say, hey man, how's the progression and what's the quarterly earnings? He'll probably not answer you. But in this space, the unique thing is that each project has a Telegram group. Each project has a Slack, a Discord group, where you can communicate with the team. So that's the kind of thing that I noticed, which is very unique and very different. So how are projects actually currently building their business? Unfortunately, because of the bear market, they are not too generous with regards to education. They're trying their best, but they are looking for a high ROI, right? And that high ROI is either user acquisition or people to actually test their beta, alpha or beta stage. That's cool. But right now, if you're looking at the whole space, it's still so far away from where it needs to be. So if that is the case, right, how are we going to continue to do this? What's the framework? So I think it boils down to everybody playing a part. I see, for example, Polymath coming out with a very good framework that is easy for everyone to start a five-step system where you can start having your own tokens with the various matrix. You know, and as an investor, I'll be like, okay, so these are your matrix. Where are they going to be allocated? Who is it going to be for? And at the end of the day, you even have to whitelist the address. Okay, a lot of the space was claiming that, oh, okay, we're not going to show the address anymore, of fear that that address is going to be compromised, or an individual within our company is going to be compromised. I can attest to that. I mean, I agree that could happen. But if you're going to be raising millions, and I think those who are in the IPO space clearly can say that raising millions in the IPO space, in the seed round, people are getting 50K, 100K. You guys are raising what? 5 mil minimum. That's a shitload of money for young people. Okay? It's a shitload of money. You can fucking last for 5 years. Okay? But right now, you're seeing for the fact that all these people do not know how to manage funds because you don't have money to bring in a CFO. You may say that you're a CIO, CFO, but some of them are even younger than me and they just graduated from business school. So tell me, where's that level of trust and accreditation? It's very hard to validate. Ever seen a fake LinkedIn account? You know how to validate? It's hard to validate because the networks are so strong. 500 plus connections, BS. All these things can be fabricated. I've seen it all. Unfortunately, I haven't seen the rest of it, so if I could, I'll definitely tell you. Because I'm going to be part of this space for a very long time. And the more I see it, I'm happy to see that there are companies that are making an effort. And not only that, these companies are attracting the right talent. Okay, that's the key. If you're looking in this space, that is the only thing that you can follow. Where they've come from strong projects before, or they've come from reputable companies, traditional companies that have made revenue, they've flipped businesses before. I think that's one of the best things. That is one of the only strongest things that we can just rely on. And from then, you kind of want to ask them, Start talking to these people, because this is the chance that you can actually go and start asking questions that are really sensitive. And even if you didn't put any money, you could still ask sensitive questions. In the past, if I wasn't a private equity investor, they will ask you, how much are you going to be putting in before I reveal this information, and I'll send that damn NDA to you. It's like, okay, let's talk. But what about a retail investor? Isn't the space about inclusion, or is it not now? What is the space now? So I'm a bit confused myself. Maybe someone can help me out. And the ICO space is actually a very good space for young startup companies that have great innovations to get funding. It is, I truly believe it is. However, there are so many bad actors that want to take advantage of the space. Hence, we have 2018. Hence, we have the whole dumping of Ethereum. But right now, if the space starts to regulate itself, you have custodial services available. You have the licensing and framework coming into play. MES just came out with a digital asset management, digital asset writing. I think it's basically by MES. 9 pointers on where your business falls if you're trying to raise money within the ICO space. Everyone's pulling their weight and helping this space along. All right. So, to me, I just sincerely hope that we see more of these things. So we encourage the big money and smart money to come in. Right? So you're going to have BARC, you're going to have institutional, you have more of indexes popping out and all that. But what does that all mean? It all just means that everything is starting to come together. That's what it all means. Okay? 2017, you had practically very little of it. I think those who are institutional traders obviously would probably know more about those kind of stuff, the inside stuff, the inside news. But I think at the end of the day, if you're going to see this whole space start to mature, you have to have greater transparency. And where's the information coming from? Who can safely say that whatever news that you see on whatever that's floating in this is legit? Can anyone tell me a legit source? Or they can confidently say that the source is legit? Good, one person. Great. We're going to have mass adoption already. So you see, that's the thing. People like Sentiment can probably pull out the data. What about people like us, right? Who are dependent solely on Google? Where do we get our information from? Is it going to be a fair subscription? Because the Bloomberg terminal last I checked was $3,000 per month. So I can't afford that, right? Or how many people can afford that for that kind of information? So I hope if this space is really going to mature and start really cleaning itself up, as long as it starts building that trust with its community, investors, projects are going to bring in the right people, at least even for a minimal fee, you get your legal and paperwork done. I think it helps out a lot. It goes a long way for you that you want to build a strong, credible brand. All right. So that's all for me. Questions, guys? Where's the Q&A slide? Yeah. So sure. Sure. So any questions, guys? I think this is one of the best time to ask, being in the space for a while. And I think if you are new, right, this will be the best time to ask. Or if you're even your company and you want to really build your brand in terms of having an educational content for your supporters, this is one of those things that you probably want to ask as well.
So what is Crypto Grinders about?
So we are all about, that's the thing. Crypto Grinders is a media and education company. So we focus on production, high quality production for the space, right? We have a YouTube channel that we started back in 2017 March, right? And literally we've had all the key speakers, influencers on the channel already. So right now it's more of where do we find the information? So we are one of the information sources on YouTube. So you can go to YouTube and type Crypto Grinders with an S. Right? The reason why we even call ourselves Crypto Grinders is because we are working like dogs, guys. That's where the term is. But then again, you can call it a gay app as well. Grinders is a gay app anyway, in the US. But hey, maybe it helps with the search engine optimization. So yes, which is a good question. We help brands or startups tell their story and also educate their community with great content, publications. That's what we do.
So once again, thank you, Ryan, so much for your kind sharing. We can leave more Q&A towards during the networking session. And now let's welcome our last speaker of the night. Oh no, I'm sorry, not the last. We have more coming up actually. So Serena, please.
Thank you, Ryan. I'd now like to invite Professor Junfei Da, who is a tenured associate professor at the SMU, Singapore Management University. He's also the founder of Symphony Protocol. Please join me in welcoming Junfei Da.
Okay, thank you. Good evening, everyone, and thanks, gentlemen, for inviting me here. Thanks for Block Network to organize this great event. I was just chatting with Jun how we are surprised that still this good turnout for the crypto event, which is amazing. Now, okay. Okay. So I'm going to share with you today a little bit from data science perspective, because my background has been big data, data mining, AI, and I've been working at SMU for the last 10 years. Now we work a lot with a lot of financial institutions, including big ones like China's Ping-An Insurance Company. They are all-inclusive financial institutions. We work with the DBS. A lot of things I'm talking about underlies the results and lots of things. We work with these industrial giants, and we've done some information platform for them in the traditional market trading, like stocks and options, these things. But today I'm going to talk about this new wave of some of the new tools that has been prepared for this crypto market, and what are the difference between the traditional one and the new challenges. Okay. Now, let's first take a look at the traditional investment information flow. Usually we say that the flow of making decisions usually needs some input, right? Usually through some, Bloomberg or such kind of information terminal. And then you have, traditionally you have these human traders. Based on this information, their experience and guts or feelings, they make the decision. In the past 2 decades, there has been this new way of using so-called algorithmic trading, companies like John or those companies. Nowadays, almost 60% of all the tradings are happening using robots or algorithmic trading. But there is a huge difference in terms of the crypto market, because the crypto investment at this current stage is very special. Now it's an emerging market, as a lot of us have shown yesterday, and this is a global market. And very importantly, it is now even a media-driven market. Okay. Now first, let's look at the emerging market. Emerging market means now we have a lot of early-stage projects. Right? We've seen a lot of projects in the early stage of building infrastructure or starting to getting the business models work. Because it's early stage, so it's tricky to do really good due diligence work. And it's hard to do cross-project comparison because everything is so uncertain. And at the same time, we have a lot of immature investors, right? Especially in the crypto world, people jump into this market hoping to get super rich overnight, but many of them are, honestly speaking, without very serious financial market background, and they're not even clear about what the projects are when they invest. And that's why they are more often driven by the market sentiment, as actually one of our previous presenters shared the research work. I'm going to talk more later. And thirdly, we have the poorly regulated exchanges. Now it's getting better, but let's recall, half a year ago, 1 year ago, right? It's basically a totally unregulated area. And that's why we need actually quite sophisticated analysis to actually uncover some trustworthy market data. What are the true data? What are actually false data? And also the second feature is it's a global market, not like any traditional stock market. You have US stock market, Singapore stock market, China stock market, Hong Kong, right? It's a 24-hour, 7 days operation now, and it's around the world location. So we need new technology to help us to real-time make decisions and track all the information. And all these pose challenges to the technological advances. And lastly, it's a media-driven market. Why? Because almost a lot of things happening in this world are centered around the media. Right? Projects use media to build a community, get their first group of core users, and also do marketing. Now, communities that use this one to educate one another, right, to share ideas and to share the trading ideas and their tips. And exchange use this media to give coupons, do promotions of these things. And in key opinion leaders, influencers use this space to increase their own visibility, branding, and also get some other benefits. Okay? Now, this means that there are a lot to do if we can make good use of the media, right? If there's enough insights, we can mine out if we have enough technology to do that. to answer that, let's examine them one by one. Right? First of all, to address this early stage project, right, we really need to use some more sophisticated tools, like such kind of knowledge graph, to put together all the relevant entities in this whole space. For example, who are the key investors, and what are the other parties these investors involved, how many different projects the core technical developer has ever been involved with. So when you put all this information into this kind of network view, there are a lot of things we can explore by aggregating information into some summarized version on a student level version. You can see a lot of different things. And also we need to make use of a lot of so-called text mining tools, right? To compare code, to compare white paper, to see what are actually the overlapping things, what are the things that have been copied from one another. Now, to accommodate immature investors, we really have to use more than one data source. Besides the traditional market data we get from things like Bloomberg, we have to leverage all the multimodal data, right? All the different things we get from all the different platforms. And we have to leverage all this opinion-aware sentiment analysis of these things. And finally, the emerging market, the fully regulated exchanges, right? Then we can talk about this so-called on-chain data. Nowadays, there are lots of good apps or tools that could help you to integrate these on-chain data. And also, we have to analyze some of the traditional, quite classic data mining tools like pattern mining and outlier analysis to see what are the abnormal flow of the certain token or something, right? If you suddenly see a lot of token flowing to one exchange, what does that mean, right? If you suddenly see an outburst of token flying out of the exchange, what does that mean, right? So there are a lot of interpretations we can make based on these data views. And to handle the global market, because it's an 24/7 operation and it's around the world, we have to really rely on real, time social listening. It's no longer the thing that you can everything handled by human being, right? Because the market never sleeps, we're literally. And then we have to rely on sophisticated algorithms, for example, like the identity linkage and data integration to put together different data source and correlate, right? These are the things that we're working on. And also because it's a media-driven market, so you have to handle not just the text data, not just the structured data as numeric data value. You have to also look at all the people's network, right? Who connect to who and why. And then you have to look at the behavior traces. And you have to also look at the pictures and videos of these different things. And there are different techniques to handle these data format, right? We know deep learning has been working exceptionally well on image data and these things. And also, very importantly, how to tell truth from rumor, right? There are lots of so-called misinformation on social media, especially these things in the crypto market, how to actually identify them and even take advantage of it when we want. Now, this is a comparison of the so-called traditional data versus the heterogeneous data that we can rely on in this crypto world, right? For example, traditional data is transaction-based. All the data you see is based on one-on-one transaction. However, in heterogeneous data format, we really see the context of the transaction, right? How people are talking about, what are the sentiment underlying, right? What are the momentum, right? What are these different things? And then it's also slider scale, multifaceted, and more importantly, as I said, when we go from streaming data to network data, we have this network embedded view of people. This is really important because it's all about who connects to who, right? And just put it together, right? We know on this side, these are the traditional tools and data sources we've been using in our current trading. But going to crypto investment, we should, besides these, we should plus these, right? Not saying that we should ignore this, but we should really add on this network data, on-chain data, right? Because we used to say that, okay, you can use Twitter data, Facebook data, Instagram data to tell a lot about your investors and consumers. In the project we work with EBS, we are leveraging those Singapore-based Twitter data, Instagram data to gain insight into consumer for EBS. However, now going forward, we have a lot of people's assets and behavior that are reflected on so-called on-chain data. Now, token combination can tell a lot about a person, and the token flow can tell a lot about the investment profile of the user. So we should combine them online plus on-chain. And then structured data we should also combine with multimodal data. So let's look at some of the research examples now that we have here, right? Actually, the previous Cheryl has already shared with another piece of work, but there has been some quite influential research work, for example, this one. People have been looking at how the silent majority, right, versus the so-called vocal minority in terms of how they were at the Bitcoin course. Now, this article has been published in Journal of Management Information Science, which is a quite respected journal, and it's a quite good article. I would suggest any serious investors could take a look. And there are other studies, for example, like they're looking at Bitcoin spread, right, prediction using search logic. Okay, this is another interesting piece of work. There are also a lot of application examples, right? There has been these already tools like sentiment history of this website can show you so-called the fear and greed index. Okay, this is the latest data a few days ago. Now we are here, right? Not very fear, not very greed, sort of like in the middle, right? There is actually the crypto fear and then greed index for the past couple of years, right? Okay. Actually, there are lots of tools of these. This I get from this website. Okay. Alternatively, crypto fear, the greed index. And then there could be other indexes like this HODL, right? And this HODL index essentially showing that how the Bitcoin bearish news and bullish news correlates with the Bitcoin prices. So to put it together, right, there is lots of technology under the hood. Essentially two-dimensional, right? This is also the research that my lab has been working on a lot. One is on the dimensional user. Essentially, we try to link people's identity and integrate their behavior and model their investment profile. On the other hand, you have to use a lot of large-scale data machine learning technology to real-time detect those as we call bursty and viral investment-related topics, events. Okay. Now, because interest in time, I wouldn't be able to go into detail trying to tell you what's underlying these things. It would be interesting study, for example, how to find a real-life relationship from the Twitter data, because this has been important in looking at how people connect to one another to analyze people. Right? We've been looking at, for example, how to real-time social listening and signal monitoring. Right? So there's flow. So these are the systems we have been building for these companies to handle their portfolio. Okay. So I think I'm done now. Okay, and there are other things about the real-time protection things. Okay, but overall, I would say that going forward, there are a lot of new data science results and tools that people increasingly feel that they will be ideal for crypto investment, especially because crypto investment at the current stage have these features. But whether 1 year or 2 years from now we're going to move into more mature market, I'm sure it will, but how soon it is, we don't know. So hopefully, that sentiment is actually, I would say, a successful movement for this direction. I've tried that platform, although right now it's still in a very early stage, but I would say there is some interesting data there. Okay, so I would encourage all of you to also have a try. Okay, thank you. Any questions I can answer on? Yes.
So, hello. Yeah. So I just actually want to know about, you showed about Facebook data just now. Can we harness Facebook discussion or LinkedIn discussion to actually use it as sentiment analysis for the crypto decision making?
Okay, it's actually a question about whether you're doing everything in the fully so-called legal way, right? And sometimes you're just building something for internal analysis. Essentially, there are technology nowadays you still can extract this data from Facebook and LinkedIn and Instagram, these things for most of the accounts. But we know that some platforms like Twitter, they officially sell their data at a certain price. But for Facebook and LinkedIn, you have to make it very clear that these data are not for sale. Okay, you're just going to use them for your own research and for some purpose. So you have to make it clear how data has been used, especially in markets like Singapore and Europe, where we have PDPA and GDPR lots of regulations about how data should be used. Now this comes back to my own blockchain project, which is called Symphony, is that we are addressing exactly this idea is how to really make use of people's data in a transparent and in a fully legal way. If you're interested, we can talk more about that. But going forward, you're going to see no matter whether it's for traditional business or investment, everybody wants to know people's personal data or user-generated so-called. But there must be a new mechanism. Right now, I know there are companies still doing the old-fashioned way, but it's very dangerous.
So you say that Facebook and so you just actually say that Facebook and linking data can be scripted for sentiment analysis?
For many, because there are a lot of accounts that are public accounts, right? Now there are a lot of discussion, actually public discussion. Now for 40 private accounts, it is very hard to scrap it out of it. But you know, there are a lot of algorithms, things you can actually infer. It's interesting, you know, there is one research that has been looked at a lot in data mining communities, how to link up people's identity across different platforms. Now, if you think about it, it's very scary, right? Because even if you're using different username, I find out this is the same user across different platforms, which means that based on machine learning and many algorithms, I can infer many things, even if I can see it. That's the same thing, you know. I don't have to look at everybody's account to know, you know, what are the general sentiments on some topic. Based on the relationship, I found out, you know, what are the community structure, who follows who, and by correlating data across Facebook, Twitter, and even Telegram channel, right, some of the bots, then I can actually already piece out a pretty good view about what people are talking about and their sentiment.
So that's a good question, and I'm afraid we will keep this Q&A for now, and we can keep them towards the networking session later. So once again, thank you, Prof. Tu, for the excellent sharing and insights. So, Serena, please.
Last but not least, I'd like to invite Jun Tao-Ju, co-founder of CipherForge, to say thanks, Jun Tao.
Hi everyone, I'm BitTemple. So a little bit of background of myself. I actually graduated from SMU in 2014 and I worked in the investment bank for 3.5 years before resigning in 2017 actually. And what happened was I heard about Bitcoin in 2010. A friend told me about it during one of the, just before the finals exam. I was like, oh shit, I have no time for this right now. And I regretted the decision ever since. And I fell in love with it again in 2015. That's where I looked at it again, because any of you guys who have been in investment bank, you guys know that we are not allowed to trade like equity stocks, like the conventional traditional asset classes. But the bank forbid us to actually make trades on that. And yeah, so that's my brief history that's my current history with crypto. And I wouldn't call myself a crypto investor. I would call myself a little bit of a Bitcoin maximalist. So what that entails is that I only hold and believe in Bitcoin for the long term. And if you guys are interested on why I believe in that, I think we can have a short chat later on. So yeah, so this is my presentation today, investing in the bear market. And so this was what I was told to present, how to invest in the bear market. And just a brief introduction of what CipherForge is. CipherForge is a delta neutral market making fund which trades on Bitcoin futures. What delta neutral means is, it sounds fancy, but it's actually, it really just means arbitraging. So we arbitrage against spot prices, we market make, and we look at systematic arbitrages in the system and we execute on those inefficiencies. Sometimes it can be a high frequency trade, which means that it occurs for like 5-10 seconds. Most of the time the inefficiencies are there for like a couple of weeks, days for you to capture. So you can actually capture some of these inefficiencies by hand. And yeah, a brief summary, I should run through this very, very briefly. The crypto market cap, I think, fell by like from $750 billion to $140 billion most project coins fell by over 90%, Bitcoin itself fell by 5%. As a hodler since 2015, and because I looked at the price previously, I think this is as Royal price there. As Royal previously, this is pretty normal in the Bitcoin market, and if you are in it for a long haul, the short-term price movements should not affect you in any way. So this is something that's interesting. In 2018, I think one of the biggest winners in the market is an exchange called BitMEX. Has anybody traded on BitMEX? Oh, we have a couple here and there. So BitMEX is an exchange that allows you to trade Bitcoin futures and perpetual future swaps with 100x leverage, which is insane. If you so these are my investment strategies in the bear market. The first strategy is pretty simple, right? Hodl for long term. What this means is just means you buy and you hold. You just keep holding it until the day comes when you actually need the cash and you, in a certain sense, cash out. But to me, as a Bitcoin maximalist, that's never really cashing out because Bitcoin is as good as money. And the second thing is delta neutral strategies. So what you do that you couple that with high frequency and algo trading. So you create something that the systematic arbitrages exploit the systematic arbitrages in the market. And the last one is passive investing. So this is more like you deposit a certain amount somewhere and you earn an interest. And I'll briefly explain how we're going to run through that. So hodl, right? This is really simple. This is the definition for people who don't really know what hodl means. It means hold on for dear life. The term was coined in December 2013, and literally someone I think posted a video saying that, you know what, I'm not a trader. I cannot time the top. I cannot time the bottom. I'm just gonna hold. Just keep holding and holding and holding and holding. And if you take a look at what happened is, I think. If you guys are long-term believers in whatever projects you guys invest in, you guys should not look at the yearly highs. The yearly highs tell you a picture of, it paints a glorious picture, right? It comes 3,000, it was 1,000, it's 3,000. But you look at the price at the yearly lows, and the growth in this price actually tells you that there is actually a growth in the number of investors in the market who will never sell at whatever the price. So I think a little bit personally putting in me, but my friends asking what if Bitcoin goes to zero. I think most of me and my fellow hodlers would say so be it. And yep, this is just a chart to visualize the yearly lows. And okay, so a couple of interesting developments I didn't have. So these are the things that I actually looked at. So I think Royal covered Fidelity. They are one of the larger, I think, derivative markets liquidity provider in the world, and they just passed the Lightning Touch for. Anybody know what's the Lightning Network? Oh yeah, great, awesome. So the Lightning Network is an off-chain network which is not on the Bitcoin network, which is supposed to provide transactions in like seconds, I think. I actually don't know the speed. So this Lightning Touch is literally a small amount, I think it's 3.6 million Satoshi, 3.7 million Satoshi, that's being just passed around. So this small amount of crypto is being passed around from many people. So it actually went through a lot of people already. And this is to me one of the bigger news because this shows signs of institutional interest in the space. And the second thing I look at is Bitcoin rewards are going to halve next year. So the reason I got in 2015 was because not just because I could not invest in any other asset classes. I actually could invest in FX. That was not effectively an asset class, but every time the Bitcoin rewards halves, the price tends to 10x. I mean, you can go back and search for Bitcoin halving, but and that's why I got in 2015 because in 2016 July, I can't remember, was when Bitcoin reward halved from 25 Bitcoins to 12 Bitcoins, and we all know what happened in 2017. And you look at the previous halving events, there's similar correlation from 100 to 1,000 from XOL to XOL. And last but not least is what I feel is lacking in this space is, so I trade on BitMEX, but the thing is, BitMEX, if you're familiar with BitMEX, does not settle physically. So if I buy a 6-month contract on Bitcoin that expires in June, there's no way I can take delivery of my cash, or if I short on the contract, I cannot take delivery of the cash on my contract. But I can't take delivery of the physical inventory of my contract, but it's cash settled. Yep, and yeah, and that comes to the second point. So there are learning training strategies for people who are interested in actually how we actually make money. So first of all, there's market making, right? I think many of you are aware. If you look at the Binance exchange, we are not the only ones doing it, but you can see there's a bit spread, and there's bots just moving up and down, up and down, up and down, up and down, trying to get you to buy or sell against them. They pay they actually either get a rebate from you executing against them, or and they actually somehow hedge the risk, or they pay a very, very small fee. And this is the economics of scale, right? If you trade like $20 million a month on Phoenix, I think, I can't remember the exact numbers of the fee structure, but basically the more you trade, the less fees you pay, so it's like an economics of scale. And the other one is arbitraging. So this strategy was very, very popular in 2017. I wrote a squat arbitrage board when I was back working at a bank to trade this. And this literally means buying low at one exchange and selling at the other exchange. So this happened very, very frequently in 2017, and sometimes it occurs for like 5-10 minutes. It doesn't always occur, so you have to have ready inventories ready on both sides. And so we loved it when anybody heard of CryptoKitties? CryptoKitties, this is an Ethereum game, right? So in 2017, CryptoKitties jams up the Ethereum network, and you know what that means? That means that Ethereum prices are off on 2 different exchanges because no one can get Ethereum cross from exchange A to B. And the lack of liquidity and inventory on the exchange is what caused the price differentiation for CryptoKitties. Loves it. It's loves it. But so and the last but not least is triangular arbitraging. So maybe let me put it in a very simple term. You all know about, I guess most of you all know about the Japan and Korean premium in kimchi, right? So that's a fiat triangle. So you buy Bitcoin using US dollar, you sell Bitcoin in JPY, and you convert the JPY to US dollar. That is a very, very, very basic triangular trade. So you involve 3 pairs, and if the price difference is great enough to make profit, you do it. And that is actually very, very inefficient in my view. So what we did in 2017, which no longer really works today, is we run a triangular arbitrage of, say, crypto to crypto. And so what that entails is you say Ripple, use Bitcoin to buy Ripple, and then you sell Ripple in Ethereum, and then you sell Ethereum for Bitcoin. So if there is a price differentiation within these, then you capture it, and those are very, very high frequency trades, and I can barely take out a calculator and calculate by hand, like if the price is, so you have to do it by a computer, and we run it off our machines. And yeah, a couple of tricks and trade is co-located machine. Binance's servers are in Tokyo, AWS Tokyo, so okay, I have very little time left. Last is trading by hand. So I wouldn't really call this this futures backwardations. That's what's happening in the Bitcoin market. Is when this is the definition, I put it up for you guys to read. So what it means is the spot price, the current price, trades above the future price. And if you hold Bitcoin at this point in time, you can sell the spot. So how do you do it is, so this is the price chart on BitMEX. The purple line is the spot price. The bars are the futures trade. And how you do it is you actually you sell 1 Bitcoin worth at 3,800, and you buy 1 Bitcoin worth at 3,600. This is the futures contract, and this is the spot. And you lock in $200 and just hold it to maturity. This is a very, very, very basic strategy that you can do it by hand without ever going to algo trading, but we actually do much more than this. Okay, coming back to last, so passive investing. So I have had a bunch of friends who got into crypto in 2017 and 18, and they actually lost, I guess, a bunch of net value on their crypto, and they are hurt. And they are asking me, like, if I can take on crypto on their behalf, invest in Cyberforge, and try to make more crypto out of it. My answer to them is a resounding no, because simply because dealing with small amount of retail investors is simply not what we do at Cyberforge, because it takes a lot of administrative work to just onboard the client, and the profits per client, because we run like arbitraging, right? So our profit margin is not that high. We run 1 or 2% a month. I think we're already like 49% a year. I think we do like 20%, but ours does not take direction. So yeah, so this comes Did you know that traders pay like 20 to 40% to short cryptocurrencies in 2008? Because it's such a great market. And in order to short sell it, if you don't have inventory, you actually have to borrow to sell. And you pay interest on borrowing. And so this amount went to these people, amazingly. So IC Markets is a traditional broker. BitMEX is kind of like a zero-sum game where you actually have two people taking different sides and paying. While Kraken is just, you're paying Kraken. BitMEX takes a cut of the peer-to-peer lending platform. Now, the question is, why can't they pay the retail investors straight up? Why do they have to go to exchange? And right now, my co-founder is there. Yeah. So any questions you can ask him as well. My co-founder and I are currently incubated at an early stage VC to launch our new project. We are not doing an ICO. So yeah, I'm not launching any fund. So we allow like hodlers to earn a return on their crypto by passively putting money in and earning a 10% per year. And how we do that is we actually lend out the thing to our margin traders for them to trade. We have already gotten a letter of intent from a crypto fund, and I will speak with Roy about it. I think Roy might have enough inventory. I'll speak with him over there. And yeah, thank you for it. I think we'll have the Q&A during the session. It would be great help if you can follow us on Twitter because we're relatively new on this new project. Thank you.
Thank you very much, Chantal. I'm just going to hand over to Maxim, who will very quickly close the evening. Maxim.
Thanks everyone for holding so long. There was a lot of content from different sides, and it was great for me also listening to different people, how they look into the market, how they analyze it, what kind of data they appreciate. Very interesting, thank you. To sum up, I remember when I entered crypto space, the first tool I learned, whatever you are doing, you lose 50% the first time. You cannot escape it. There's kind of fee, in the crypto market. Because if even I tried to show something, or even try to teach and explain, so not really helping. You need to experience something, and it's very specific. Our mind is not built up to deal with this kind of volatility. So if you decide to invest, whenever you decide to do it, don't do it with big amount. There's a very high risk you will lose half of it. Regardless, you're in a bear market, bull market, and it's fine. It's okay. This is a risk, so you should be aware of the risk. Now, as I say, the situation now is very different to what it was before. As you listen from many different people talking here, we know more, we have more data, we understand more how things are working, we build a deeper context, we connect things much better as it was 2 years ago. Spend your time to understand what is valuable for you, and of course in crypto you never trust anyone. Not because people are bad, just because it's not needed. It's a peer-to-peer market. You find for yourself what you understand, you use it. There's actually no need to trust anyone. There is a lot of data.
For this event tonight.
Yeah. So it's a great time. There is much less hype and much more interesting people you can meet everywhere. Take this time, and in Singapore I'm very positively impressed. A lot of good projects and people like BitTemple and BitConnector who are really keep doing the efforts to bring value to the community, and get ready for the next cycle. It's coming sooner or later. Yeah. Thank you very much.
Thank you, Maxim. So I'm currently standing between you and the food. So make your way over there to food and drink, and thank you so much to BitTemple and Block Connectors for putting on tonight.